Yeah, let's go YouTube. This is Chris Hendricks. So today we had CPI. It's the 11th of the first month of the year. So we had our very first CPI of the year. And yeah, basically, I'm going to show you guys how I traded my CPI today. So I really didn't have time because I remember I was in bed for, most of the day. So I wasn't really looking at the market, so I didn't really have time to actually analyze and have a solid plan to trade the CPI. But then I saw Manando had a really good selling position. He hit this level right here, and he basically sold uh, from this first pullback. So when the news played out, it created this high right here that was during the CPI movement. So let me just zoom in a little bit. So basically this volatile movement that you see was the events of CPI being released, or yeah. So he had a good sell. I'm pretty sure he just used this level and just winged it for a sell. And I'm really not sure where he actually closed these positions. So yeah, that was a great sell. As you can see, the price really dipped. I actually didn't see the market dipping this low. But yeah, that's what happened. I saw on Instagram most people sold actually, which was such a good sell online. So since I didn't have time and I literally just got out of bed, got my phone, opened my laptop, and I think I opened two separate windows. Where I had Nasdaq, on the other window I had US 30. So I was watching them happen, and on my phone I opened the chart as well and opened I think USD JPY. So I was just watching what happens, since I really didn't take my time trying to figure out the direction of the news. I just watched what happened. So okay, hold on. See this long wicks. So this is the candlestick from the news release, and yeah. So what I did was I kind of winged it. I told myself that okay, the price is most probably gonna recover for short-term buy, just to cover or correct the movement of the news release, and maybe I could capitalize off that. So what I did was I saw the price had some support right there. So like, oh, okay, it means the momentum of the news release might be, reaching a dead end right here for a sell. And the price just started being really choppy. So I was like, okay, let me risk this short-term buy. So I literally took my trades during this candlestick. I think it rejected quite a bit, and I set my take profit basically around these highs. I actually didn't set a stop loss for this one because I was using my testing account basically, because obviously you're not gonna risk such things with your main account where you could literally lose everything, especially trading against the direction of the actual news release. So I bought the rejection, and basically, as you can see, the price bought. It tried to basically cover the whole movement of the news release, and that way my take profits were triggered and basically closed. I managed to double the account, just a bit over double. Yeah, which is good return, but I know the sell was just ridiculous. As you can see from these highs, the sell was just insane, or basically even here as well. So the sell was just ridiculous, but I was too late for the sell, and I didn't want just to jump on the wagon when it's already too late. So it's like, cool, let me just let it go. And I saw a quick opportunity. I took it, double the account, and yeah, that was basically CPI for me. And yeah, very simple, no structures really needed. It was just, just the level rejection, and that's it. So regarding US30, so US30 behaved the same way. As you can see, we had this news release movement with this huge candlestick with the wicks, and the price recovered. But when I was basically big testing on how maybe I could have got this what do you call this sell, it was actually very simple. As you can see here, we have a nice resistance right there, and you actually have the price giving you this bearish structure or correction, and then it bought, forming this correction as a continuation, because we're coming from a nice impulse. So we all know from a nice impulse what we should see is a correction, and that correction is likely gonna be a continuation for a buy. So we have that in mind. We can see that this buy basically reached its 90% rule, which is actually, hold on, let me try to remove this. What the fuck did I lock this? Oh, okay. Hold on. So we can basically see this nice double top as well. This would be our second leg of the double top, and right at the double top, that very first touch, it rejected and it started selling. So one, that's a sense of direction that the price is probably going down, since we are at a double top and the price already rejected prior to the news release. So that's the second thing, just from the level. The second thing is, obviously, we see this uptrend movement. It's still a structure, but it's happening in a uptrend, opposite to what this was, where it was bearish. So this one is bullish. So it's basically the opposite of this structure, because obviously with the structure, for you to get your buy, you would have had your boundaries or your trend lines and you buy, basically. So that's what we're gonna do with this current setup. Connect your touches on your resistance. You can see those connect very well, looking very clean. And we do the support as well. But then since we're selling, we don't really care much about the support. We only focus on the resistance because that's where we will be taking our selling positions. So just the confluence of this ascending structure and this zone, it gives you a double top. So those three confluences tell you the same thing. It's telling you a sell. So when it comes to our structures, you would normally want to see at least 3 number of touches on the side where you'll be basing your entry at. So in this case, we are focusing on the resistance because we're selling. So we need a number of 3 touches on the trend line, the third touch being the highest probability, and that's what we're going to focus on. So typically what you would want to see on your third touch is some kind of rejection from the touch of the trend line, and in this case the zone as well. So we want to see some sort of rejection, and we don't really see much revealing candlesticks in terms of like rejection as well as like reversal candlesticks. So typically we'll just scale up until you see something desirable. So I think I'm just gonna stick with the 30-minute time frame because it has some kind of depth. So you can see the price rejected from this small bullish candlestick where you have wicks on both ends, and then the last bullish candlestick had when at the opening of the bullish candlestick, let me just zoom in. So you can actually see that the opening of the candlestick doesn't have a wick, which means the price had momentum to the upside. But then as you can see with this huge basically wick at the top of it, it shows a lot of rejection. So typically what we want to see right after the rejection is some kind of reversal candlestick. So whether it being the hammer, evening star, morning star, the doji, wherever the case may be. So this one is more or less like a reversal candlestick because the body is small, it's bearish. So in a case of a sell, just like this setup right here, you want to see at least a bullish rejection candlestick, and then your reversal candlestick would prefer be red, so bearish. So we would consider this as our first or our only reversal candlestick from this third touch. And then what we'd want to see right after the the reversal candlestick is a change in momentum. So basically your next candlestick from that reversal candlestick, which is already bearish, you'd want to see another bearish candlestick, but which shows like a lot of momentum. So how do you see momentum? Basically the size of the candlestick, and you can also point out the opening and the closing. So the opening shouldn't have, well, I'm using what's this chart, Heikin Ashi. So it hides a lot of wicks where there's typically momentum, where your traditional candlestick chart would have way more wicks. So this one just minimizes the number of wicks and just tries to leave out the ones that are actually meaningful. So here you can see we have no wick at the opening, and the price just sold off. And when you compare the size of this current candlestick, the momentum candlestick that we're looking at, and you compare it to the previous candlesticks, so you can see it engulfs basically the last 5 or 6 or whatever the case may be. So that tells you that, okay, now we have our change in momentum. So that's where you wouldn't typically enter. You would have to wait for another confirmation by checking out how the next candlestick looks like after the momentum candlestick. So you'd want to have at least the number of 2 momentum candlesticks. So you would have waited for this one, and then the following candlestick is this one. So you can see, okay, we still have momentum, same situation with the opening, and from that point you have all the confirmation you need to execute the trade. So the next candlestick, that's where you open, put your stop loss just a few pips above the highest point, and then when we scale out, you can see we didn't even consider the fact that there was going to be news or anything. We just did this simply off, price action, just the structure of it. So sometimes you would find, it's a coincidence that you find a very good setup where you have that, like an idea of where the price is going, all your requirements for a valid setup are met, and then in the mix you have a news release. So with the structure it played out. So let's just zoom in where the news happened. So this, okay, let me just remove this to the side. This was the news event, and you can see the price pushed back up just above our entry point, but our stop loss is way above here, so the news event didn't trigger anything, unless if you're using a weird broker where your spread is like 500 or something weird. So the next, when the news event happened, the price obviously corrected that movement by buying for a bit, and it went a bit higher, but then you can still see the price is, the stop loss is not anywhere close to being triggered. And with this movement, the news event was basically over, so you wouldn't have like insane spreads when it came to this pullback to the upside. So with all of that said, you had your beautiful selling structure, and it might probably even go maybe around these levels, who knows. But I'm basically waiting for the price to, because it already gave us a pullback, so I'm waiting for the price to actually give us some kind of correction. So maybe something like this. Hold on, let me just fully fix this. Okay, no, that's not what I want. Okay, that will do. Okay, this is actually way too. Let me just draw it out. It's fine. So basically, would want the price to go a bit sideways and then continue going to the downside. So if we see the price giving us a correction right there, and it's basically flat in nature, just like the resistance is a bit flat, and as well as the support, we are definitely looking for selling positions, and we're going to follow the same concept by having at least three number of touches. So that will be our first one, second one, and third one. And then that's where we sell off, because the third touch always has the highest probability. Yeah, so basically that's what we're looking forward to. I'm thinking, because tomorrow is Friday and it's already 8, 8:30 p.m. Thursday night, so it's like it could happen by Monday or so. But yeah, that's what we're looking forward to. And basically, this is the next setup that we're gonna take right after CPI. So that's it for today's video. I was just showing you guys a quick rundown on how I personally got the Nasdaq trade for CPI event, and alternatively, you could have basically caught the USDT with this kind of setup. It's basically the same concept or the same structures that I use for everyday trading, whether it's index currencies. I use the same formula, the same concept. So as you can see, it really works in all these different fields, whether it's the news event. In this case, it was just a coincidence that this happened. We had a perfect setup, and the news event basically boosting the whole movement going, making it go a bit faster. So yeah, I think that's it for today's video. Yeah, about the CPI event. And I hope you guys, if you did trade it, I hope you guys made profit. And if you didn't, maybe you probably learned something from this video. So yeah, thanks for watching. Make sure you subscribe, like the video, leave a comment.